Financial topics, trending news, politics all come together here at the Vault.
All right, man. 2022 is right around the corner. Yeah. Tell me, what should we expect?
You really expect some volatility. I think next year, all right, this is gonna be tough. So I want to make a nice prediction saying it's going to be a great year, this, that, and the third, and it has the possibility to be that, right? Due to the fact that that they got the infrastructure bill done, right? That's very, very bullish for the marketplace, right? That gives us our next leg higher to invest in, right? However, there are going to be individuals who work against that theme, right? So how long it takes to implement, right? What bottlenecks are there? What resources do we actually have to get it done right now, currently, right? Because we're at a shortage of pretty much seems everything at this point. So it has the possibility of being a great year, right? However, I do believe we're going to see a significant amount of volatility, and I'll get into why. A big reason why a lot of the market took off was because there was so much money in the market and people had to put that money somewhere because they had nowhere to go, right? So instead of going out and spending it on experiences, they put it on the stock market, right? So it led to companies like Tesla, right, taking off. And over the last 3 years, right, Tesla has produced over roughly 1,500%, right, growth in 3 years. Some of that is due to the fact that it's a great idea, it's a great business, right? Some of that is due to the fact that people are judging this company based off of its future value, not what it's worth today, right? So my job as an advisor, trader, analyst, right, is to determine which one of these is best to be in your portfolio, right, at a moment's notice, as opposed to, and here's a big reason or a big advantage of active management versus passive management. And especially in an environment like this where you have to be picky, right? Because if interest rates rise, companies like Tesla, Nvidia, Apple, anything that's in the tech space, right, is going to have their margins squeezed, okay? And if they're making less money off of less margin, it's less investable. Right? So therefore, they are not going to be able to keep these valuations that they are currently enjoying so much, right? Yeah. Not to mention the fact that competition is coming down the pipeline. Ford and GM are going to catch up pretty darn, and Toyota are going to catch up pretty darn quick, right? With the scale that they have and the amount of influence that they have over the parts market, those companies are going to do just fine over the next couple of years. And I'm not sure if they're going to be taking market share away from companies like a Tesla. However, they will be putting themselves in that realm so that they can now compete on a better footing. Okay. Right? So that's going to lead to volatility, right? And you don't want to be in a stock like that that's currently at just astronomical valuations, right? And then have that thing get cut in half, right? So be mindful about what it is you choose to invest in 2022, but think about this. So if you look at the 10-year treasury over that time period, the 10-year treasury from July of 2016 was at 1.38 to December of 2016, where it almost hit 250, okay? Then, so if you look at, you know, some of these high-flying tech stocks over that same time period, Nvidia went up the most at 98%, okay? Tesla at that point in time went down 12% over that time period that it jumped, right? And that's the reason because they are so interest rate sensitive, right? Now, let's take another one. Square. Square is a financial service payments company, okay? Interest rates went up. They should be able to benefit from that, right? They should have a certain amount in reserves that benefit from having that amount of cash, right? So JP Morgan Chase. Banks normally do well when interest rates rise, okay? So JP Morgan Chase went up, right? Now, let's take a different environment. Let's look at the time period for 2020. April of 2021, it basically went up about 1%, right? That's a pretty quick rise, right? So what outperformed, what underperformed, right? Underperforming during that time period, Nvidia stock came back down, right? as opposed to in 2016, it actually went up 98%, right? But that's because once your valuation gets as high as theirs are, you have to start to question what future revenues are going to be and whether or not they're going to be able to accomplish that. So that's why when I look at a company like Tesla, in the aggregate over a 10-year period, how can I justify the fact that Tesla is going to stay at that valuation over the next 10 years? It's not really plausible.
It's unlikely, yeah.
It's unlikely. So I have clients who love that company, want to invest in it. I want you to too. Let's do it at the appropriate time, right? So, this is just a piece of kind of how I interact with my client base and show them in real time exactly how and why I would deploy capital for them and in a manner in which is appealing to the eye.
Yeah, because I mean, as the average John, average John Doe, you look at something like this and you think, oh, I got to get in on this.
Got to get in.
But the volatility or the chance that it could come back to what it is typically at.
Right. So when I think about the whole crypto space, same thing's going on, right? We have a lot of money sloshing around, but if interest rates really rise and you have to really do an in-depth look at what that company is doing or what that instrument is doing and how it interacts in that environment, well, you have to change your tune a bit. That's kind of how I feel about or how some individuals want me to feel about China right now, right? China, unfortunately, is, going through a transition. And, that transition affects the rest of the world. And, if they want to have a bigger clamp on their own destiny, I don't really see a problem with that. However, to an investor who's looking to invest there, that could be an issue. But when I think about, again, the long term, right? In the short term, those are issues, right? But over the long term, you're talking about a market with 2 billion people in it. That's hard to walk away from. You know what I mean? Not to mention the fact that China will at some point be the world's largest economy. It's just a matter of time. It's not a matter of if, it's a matter of when. So, I mean, individuals who are, critical of China, I completely understand you, right? But that's not stopping the overall trend, right? So people are still investing in China. People are still setting up businesses in China, regardless of how President Xi is acting, right? So, it's great for people to, and this is why I said earlier, I would hope that people would leave the cubby holes. You know what I mean? Because when you're in your own little cubby hole, you tend to stay focused on one set of information rather than looking at it in the aggregate. And when you're dealing with your future livelihood, I would take a stronger stance in making sure that we looked at the aggregate, the whole picture, so that we could fully understand how to achieve your goals.